Imagine waking up tomorrow to discover that every dollar you've ever earned was never really yours. Not because it was stolen, not because you were taxed, but because the global financial system was designed from the very beginning to make sure that every nation, every business, and every person exists inside a perpetual cycle of debt, a cycle that cannot be escaped. A cycle that quietly transfers power upward year after year while most of the world remains convinced that this is just how money works. But what if this isn't how money has to work? What if the mechanism powering global debt was engineered, not evolved, and what if the true beneficiaries are not governments, not economies, but a small network of institutions that the world rarely sees and almost never questions? Today we unravel the secret mechanism that turns global debt into endless power. And to understand it, we need to go back, not decades, but centuries, to the moment money stopped being something you owned and became something you owed. Section 1. The Origin. When money became debt. The story begins in the late 1600s, when European empires were running out of gold, silver, and patience. Wars were expensive, territories unstable, and monarchs desperate for financing. Traditional lenders couldn't meet the demand. Enter the birth of central banking. It began quietly, with the Bank of England in 1694, a private institution that agreed to fund the government's war debts in exchange for a monopoly on issuing banknotes. This may sound harmless today, but it created a new category of money backed by government debt. Instead of printing money from existing gold reserves, the bank created money by lending it, meaning every new unit of currency came into the world already owed to someone. For the first time, money wasn't wealth. Money was a promise, a liability, claim on future labor and future taxes. This mechanism didn't solve the debt problem, it institutionalized it. Because if money is issued through debt, then the only way to create more money is to create more debt. And once governments realized this, debt stopped being a temporary burden. It became the engine of national power. Section 2. The Rise. Debt as a global operating system. Fast forward to the early 20th century. Industrialization accelerates. Nations grow rapidly. Wars become larger and more frequent. And each crisis requires unprecedented financing. Central banks expand. Commercial banks adopt fractional reserve lending. Governments discover that with the right banking partners, they can fund anything: war's infrastructure, social programs without raising taxes. Debt becomes the oxygen of modern economies. By the time the Bretton Woods system is created in 1944, world leaders have embraced a new reality. The global economy doesn't run on production, it runs on borrowing. The US dollar becomes the world's reserve currency. Other currencies peg to the dollar pegs to gold, at least. For a while, but debt demands expansion. Debt demands growth. Debt demands more debt. By 1971, the gold backing collapses under the weight of global obligations. President Nixon severs the dollar's tie to gold, officially launching the world into a new era, a fully debt-based financial system. Now, money is not just created through lending, it is created exclusively through lending. Every mortgage, every business loan, every government bond, every swipe of a credit card, all of it adds new money to the system. The more money that exists, the more interest payments flow upward toward the institutions that control credit, liquidity, and debt issuance. Debt is no longer a tool, it is the system. Section 3. The Breaking Point. When debt outgrows reality. As globalization accelerates through the 1980s and 1990s, countries become addicted to borrowed money. They finance deficits, fund growth, and stimulate economies with near-endless credit. But there's a hidden trap. When money is created as debt, the amount owed is always larger than the amount created because interest must also be paid. This creates a mathematical imbalance, a built-in shortfall, a permanent hunger for fresh borrowing just to service old borrowing. By the early 2000s, the global debt superstructure becomes so large that traditional repayment becomes impossible. Governments stop talking about paying off debt. They talk about managing it. Create more debt to fix the collapse caused by too much debt. Central banks cut rates to zero, then below zero, then print trillions, then buy government bonds, then buy corporate bonds, then backstop entire markets. The lender becomes the buyer of last resort. The buyer becomes the market. The market becomes dependent on the lender, and the world enters a new stage: debt as a permanent operating condition. Section 4. The fallout. When debt becomes power, here's where the mechanism reveals its true nature. If all money is debt, if debt must constantly grow, if interest payments flow upward, then those who control the creation of debt control the entire financial system, and that control is not distributed evenly today. A handful of central banks influence the liquidity of the world. A small group of supranational institutions dictates debt sustainability rules. Global markets react instantly to the decisions of committees and not governments. Sovereign nations depend on borrowing from institutions that they do not regulate. Debt becomes leverage. Debt becomes discipline. Debt becomes power. Because when a nation runs out of money, it loses independence. But when a central bank runs out of money, it prints more. This asymmetry is not accidental. It is structural. And it is why global debt, public, private, and corporate, has now surpassed $315 trillion. More than triple global GDP. The world owes more than it can produce. But the system requires that borrowing continues. The mechanism is self-reinforcing. Debt creates, money gives. Money creates economic activity, gives activity, depends on more debt, gives more debt, enlarges the system, gives system expansion, concentrates power at the top. It is a loop, a cycle, a silent engine, and it never stops. Section 5. Failed fixes. Why nothing changes. Economists propose solutions: debt ceilings, austerity, spending cuts, stimulus caps, monetary tightening. But none of it works. Because none of it addresses the core design. Money is created as debt. The system collapses if debt stops growing. Attempts to reduce debt trigger recessions. Attempts to freeze debt trigger deflation spirals. Attempts to reverse debt growth destabilize banks. It's not that leaders won't fix the system. It's that they can't. The mechanism is too embedded, too profitable, too essential to the structure of modern power. Section 6. Modern parallels. The pattern repeats. Look around today. Nations. Borrowing to pay interest on older borrowing. Central banks buying government debt to keep rates down. Corporations issuing debt to buy back their own stock. Consumers surviving on credit lines and installment payments. Governments with debt loads exceeding 100 to 250% of GDP. These aren't coincidences. These are symptoms of a system that must inflate or collapse. And every time the cycle repeats, more power consolidates at the top, because the more a nation owes, the more leverage its creditors hold. The mechanism continues. Quiet, efficient, invisible. 3 takeaways. 1. Modern money is debt, not wealth. Every dollar is born with an obligation attached. 2. Debt concentration leads to power concentration. Whoever controls the issuance of credit controls the structure of global finance. 3. The system is designed to grow endlessly, not because growth is natural, but because the mechanism demands it. Final warning: a debt-based financial system can expand for decades, but it cannot expand forever. When the world's debt grows faster than the world's ability to produce value, something eventually breaks. And when it does, power doesn't disappear. It consolidates. The question is not whether the mechanism will reach its limit, but who will control the system when it resets. Call to action if you want to understand how this mechanism shapes your life, your economy, and your future. Make sure to like, subscribe, and turn on notifications so you never miss the next chapter in this financial story. Because this isn't just history, it's happening right now.